Welcome everyone to tonight's meeting of the New York Technology Council. Delighted to have you here. Tell you a little bit about the organization. Should be a really interesting topic tonight, but first let me tell you about us a bit. We have lots of sponsors. This is a partial list. Recently we had to split this into two charts because the list is growing, and we added one this morning. Cushman & Wakefield just signed up. And, here's the second part of the list. And these sponsorships are essential. Without these sponsors, we couldn't exist. We wouldn't be able to pay our bills. And here's a very partial list of some of the organizations that we work with. Some are local, some are national. I want to give a special thanks to EisnerAmper for providing this space for us. Very much appreciated. They are one of our very active sponsors, and we appreciate all of their support, including the space they provide. So tonight's event is in some ways very typical of what we do. It brings together experts in the field or fields, and they talk about topics that are important and relevant to the tech community. While typical in that sense, this is the first event we've done on cyber liability, and it's been a topic of growing concern, and we think it will be increasingly important, and so we thought it was time to put such an event together. And our moderator tonight, Andrea Dudek, is behind me, and she was the driving force behind tonight's event. So we should all thank her for her efforts. We are an organization mostly of volunteers, and that includes putting together a lot of our programs. This one, Andrea took the lead on. But if any of you are interested in a topic and have a real passion about it, let me know, and maybe you'll help us organize an event around it. So with that, let me turn it over to Andrea, and she'll introduce the rest of the panel. You've all got programs which have the biographies of the speakers, so we don't have to read them. So enjoy the evening, and thanks for coming.
Thank you. Thanks, Eric. Good evening, everyone. Just so everyone, I don't know if everyone can see the names. We have Joe DePaul from Willis, Dave Selembo from the Hartford, and Chris Avery from Wright, Tremaine. So we really want this to be very interactive. The last thing you guys are here for is for somebody to read from slides. So if there are questions, please, let's go ahead and ask them. We're going to talk a little bit about kind of the genesis of what might make a cyber-like claim. Then we're going to go into some of the legal and regulatory issues and how someone might be responsible. And then probably the thing that's blurriest for most people here is what the insurance piece of it is like. And at any time, definitely please feel free to ask questions. So I think Chris, you want to talk a little bit about what the different types of breaches are?
Sure, happy to. Good evening. Is this all right in the back? Yep. Certainly thank you, Eric and Andrea, for the invitation to be here. It kind of started with the image that's behind me. This is kind of the full spectrum of what's happening out there. This is a year-old data. It was released this year, but reflects data from 2013 from the Verizon data breach report. And I guess maybe the one thing to supplement what you can read on the screen is that this is across all different sectors. And so as you look at this and you look at the different categories of threats that may face your businesses, is what are these? Which of these are relevant to me? Which of these are relevant to my organization? So if you're not taking card-present transactions, then you're probably less worried about card skimmers. If you've got an online presence, then it's a different set of concerns. What kind of data you have amplifies the threat. So this is the full spectrum. The one maybe that I just highlight, I think is probably a little underrepresented, is insider misuse. I think there's a perception to focus on the malicious insiders because they get a lot of news, and certainly the NSA is dealing with that right now and has been for the last couple of years. But it's also the kind of the unintentional insiders, right? The folks that through carelessness or negligence or recklessness, because they're not paying attention or maybe they're not following your policies, that also contribute to many of these other things. That it's those insiders that are often the ones that open the doors and windows that allow the point of sale intrusions that allow the websites to be compromised, that inadvertently install the malware on your PCs.
Okay. Next we have the different types of kind of really what the risk exposures are, and Joe or Dave, do you want to talk about that?
Yeah, sure. So we can you hear me? I don't think I need to move over to the mic, right? So good. Excellent. So we talk about different types of risks and exposures. We talk about different types of data, PII, PHI. I don't know if you folks know what that is. I hope you do. Personally identifiable, protected health. And we talk about where that information is and how you're storing it and how you're manipulating it, or if you're working with one of your clients, or maybe it's with a third party, who's responsible for that data, and when are they responsible for that data, and then ultimately who owns that data, because that's ultimately who's going to be liable. I think some of the case law tells us and some of the state laws tell us. And then we also talk about a data breach incident, and we talk about the wrongful disclosure of information. And many of you know, maybe some of you don't, that when we talk about data and information, it's data and information in basically any form, depending on which state you're operating in, or your customers are in, or your clients are in. And obviously, as we look at different industry segments, we look at, obviously, if we're talking to companies that are working with higher ed clients, or we're talking with companies that are working with clients that are maybe in the public entity space, and you're providing services to them. They all have different risks exposures, and they have different data types, and they have different data sets. But when you disclose data, it's really about how did I disclose the data? Was it intentional, like some of what we're talking about, maybe by a rogue employee? Was it unintentional? Was it a mistake? Was it a software error or omission? Was it a technology issue? Was it a document that should have been shredded, and was it shredded properly? Or was it a lost laptop, something like that? And then some of the other things that we talk about with regards to third parties is, we saw it in a much larger breach, but when we talk about the target breach, we know that the target breach emanated from a third party, right, from an HVAC provider. So when we're talking about any third party provider, the exposure is, have you done your due diligence on those entities? Have you really looked at what they're doing? And I think later on we're going to talk about some of maybe the contractual obligations and some of the statements. But if someone is holding your data, or if someone is processing your data, or if you are processing data for a client of yours, what does that third-party contract say, and who is ultimately liable for it? Because ultimately, if you're a small organization and you release data and you're not properly protected, either by having a proper plan in place or looking at the financial consequences, you can go out of business. And we've actually seen examples of that happen, where organizations were not properly prepared, they were not trained, they didn't expect the financial loss that did ensue, and there were contractual arrangements. So what does that really mean? And then when we talk about technology errors and omissions, again, if you're a technology company and you're providing services, you're providing products and or technology services, well, what does that mean? Are we providing software as a service? Are we a software provider? Are we an ISP? Are we doing something else with the data? So there's many different types of trigger points here that we talk about, many different types of events. Really depends on what industry you're in, what sector you're in, and what you're doing with the data.
Can I emphasize maybe just one point on the what? The what data is that certainly everyone is kind of a laser-like focus on, credit card data, right? That certainly, I think it's 65% of all of the reported breaches. Mm-hmm. But that still means 45% of the breaches that result in the exposure of data, sensitive data unrelated to payment cards, right? Whether it's personal information for your customers, your employees, or if you're a large social networking site, maybe it's just to publicly shame you that your passwords aren't hashed and salted. Right. It depends on who you are, and it's kind of that relevancy question of what's sensitive to you, because all of our companies, all of our organizations have something that we don't want out there. And if you're a small startup or you're a biotech, that maybe it's your proprietary data, that's the crown jewels, and there's still a market for it. It's not just payment card information.
Yeah, and as you look at the information, the first question that you want to be asking yourself is, why are you collecting this information to begin with? If it's your own proprietary information, that's one thing. But if you're collecting data from individuals, or you're collecting data from third parties, is that data necessary for you to even have in the first place? Sometimes we become pack rats with information. We like to collect everything and have it because we think we're going to use it later on. It becomes a problem for us long term. So when you think about your organization and your business, and if you're a technology company helping other people and other businesses, you want to think through what you're collecting, what you're handling for your customer, and how that may or may not be needed at all. Most of the issues that you have with larger breaches is the data gets aggregated to a level where it just becomes such an exposure that I'm not sure anybody really recognizes they have it until it's too late.
Yeah.
And you're spending a lot of money to recover from the breach of data that you didn't probably even need in the first place.
Were
You no longer had to.
Were you benefiting from it financially? That's where we're going with that.
So you guys just hit on the next slide, actually. You know, we all hear about Target and Home Depot and this one and that one, but what are some of the potential costs, issues, claims? And I think it'd be helpful also, I know there's a lot of attorneys in the audience, but there's also folks who are not, really to help them understand within the types of claims, costs, charges, what is first party, what is third party, what does that mean?
Sure, I'll take it. This is a question that I get asked a lot by my agents and my clients. What happens is they get confused. They have a breach and they start thinking, is this a liability or is this my own first party exposure? So when you breach a data privacy law, your own organization is going to have to respond to that data privacy law, whether it's notifying those that were impacted, whether it's credit monitoring, you see some of the costs up here, whether it's hiring a consultant to come in and investigate what happened on your system and why it got released. Those are all first party expenses. Those are not liability coverage. That's not someone suing your operation or claiming damages against your company for something you did, your negligence or your act or error or omission. So a lot of individuals think when they have their liability policy, they've got this first party piece all addressed nice and neat, and it's not a liability coverage, it's a first party coverage. That's the first thing I would make sure you're thinking about. Now, that same event could evolve into third party liability against your organization, where somebody comes back to you and says, my personal information was breached, and I suffered a financial harm or a personal injury associated with that, and I'm going to sue your organization for those damages. A lot of people are having a hard time proving their future damages, but if there is a demonstrable damage, it would be a liability coverage for your organization that you would need liability protection for. So when you look at the coverages that we have listed up here, things like notification, a breach coach, forensics, those are all first party coverages. And so when you're thinking and looking at your insurance program, that's the thing you want to talk to your agent about. Make sure you have those addressed properly for your organization. When you look at the litigation piece, if you're a technology company, down at the bottom you have technology errors and omissions, and that's your professional exposure that you're doing in your services for your customers and others, because anybody can sue you whether you're providing them services or not.
Yeah, most organizations that we speak with, they're whether they're small, medium, or large, they don't really fully comprehend that you can actually protect against your own first-party loss, which is exactly what we're talking about here. So it's not only I'm liable to someone else, but I have my own first-party costs that are going to come right out of my pocket because I'm mandated to do something by state or federal agencies. So that's where the third and the first-party piece really becomes valuable to you in a solution of protecting your organization and potentially protecting your clients as well.
At this point, the immediate cost of a data breach is about first-party coverages, and that's where we're seeing most of the costs for clients that are suffering a breach. It's in the first party. They're not getting sued at the back end at this point anyway. They probably will at some point, but most of them are suffering hundreds of, 50s,
Right.
hundreds, and some of the larger ones. Think of your organization a little different than Target and Home Depot. You're probably not have that large of an exposure if you're a smaller organization, I'm suspecting. So you have to think about what your organization's information is and what level of coverage it might impact you.
Yeah.
Well, and just to add that they're getting sued, but fortunately they're not resulting in adverse judgments, right? At least on the consumer side, right?
At this point, yes.
But it's the consumers, it's the banks, it's the credit unions.
It's the large organizations right now
Right.
that are being sued in the large breaches at this point. Those are the ones we're seeing. Adobe's the one that's out in California right now, and there's a
Sure.
couple others.
I mean, and not to talk about the large breaches, I don't want to spend too much time on this, but if you saw the Target information that came out today, they've already spent about $128 million. So around, and they've announced that in their financials. So if you look at that and you take a look at your organization, most of the reports that I saw are on average anywhere from $2 to $3.5 million as far as looking at a data breach, the financial consequences, etc. If you were to have an event, whether it's a first or third party combination of these types of consequences, could you survive that? Could you handle that? What is the process, and how do you go about mitigating that event?
So, Joe, I think it's important for these guys to understand that it's not just the company or the owner or the employees who are impacted, but there's a lot of folks who are actually stakeholders, and you have to consider them.
Yeah, so there's many stakeholders. There are obviously stakeholders that will be definitively involved in the event itself. So if you've not been in an event before, and I don't call it a breach because a breach connotates some legal ramifications, and we always talk to our clients about a data event or a data incident. And if you've not been involved in one of these before, you will quickly learn that depending on the size of the event, whether it's a data breach event or a technology or a mission event, the wheels can come off the bus fairly quickly if you're really not handling it, if you don't know what to do. And involving different stakeholders, and in fact having an incident response plan, having a crisis management plan in place with these different individuals before the actual event occurs, making sure that you get around this table and you talk about, well, what information do we have? What information did we think we have, and who was responsible for it, whether it was us as an organization or whether it was our third party. And if our third party had an event that we are going to be held ultimately liable for, well, did they tell us about it in a timely fashion? So you need to get a plan in place with these different constituencies. Certainly your investors are going to want to know what happened. Your clients are going to want to know what happened. But talking about it with general counsel, inside counsel, outside counsel, talking about it with employees, making sure that if you've got IT involved, many of you folks are in the technology space, making sure that your finance people are involved, because ultimately you'll all have to come around this table to talk about what has occurred, how do we look at that event now, how do we mitigate it going forward, and what's our message that we communicate out. Because as we've seen, there are many, many organizations that have actually communicated out the message incorrectly. And when you start messaging wrong, and you have to message maybe twice or maybe 3 times, you are actually spending many, many more dollars than you need to. So making sure that you have a plan in place that's pre-thought out, that's available to discussion, and actually should be looked at fairly often. Because as we all know, when we look at these events and we see every day that there's a new type of malware, that there's a new type of an event. So making sure that these are robust and they're changing and they're evolving as you see different events occurring. And I think that's really important.
And it can make a difference, right? The organizations that have that plan, it doesn't have to be a long 30-page, get the lawyers in the room and write out this long document that no one references, but that have that preparation in advance of, how are we going to learn about these events internally? Who's going to be responsible for managing them or responding to them? Right. What is the communications plan? Who are the stakeholders? If we need assistance from folks, service providers, forensics, lawyers, others, who are we going to call on? Yeah. Can make a material difference in the actual overall expense of responding to that event.
Yeah. Many of the organizations here are smaller organizations. I'll get to you in 1 second. But as we talk about ownership, we're talking about some private equity ownership, some venture capital. We work very closely with our M&A group, and the M&A folks, and we are talking about, well, at what point in time do we need to put something in our reps and warranties? What about survival? What about some of the other clauses? Because if I'm going to sell my organization, the value of my organization is what I'm proposing my reps and warranties, right? I'm proposing that to the seller. Well, if something happened, well, who's ultimately going to be responsible for that? And that is definitively going to change potentially the valuation of the company, what is potentially down the road with regards to a buyout, an earn-out, et cetera. So those things become very important.
And I will say, as the former risk manager for a Fortune 30 company, I ran risk management for Dell for many years. If a small vendor came to us and they were going to be holding data and they hadn't thought about their liability risk, and they said, oh, we have liability insurance. Great, you're holding my data, but you have insurance if somebody slips and falls on your property. Thank you very much. It does become very important for them to understand, and I think just from a next slide perspective.
Was there a question?
Yeah, did we want to?
Okay, sorry.
Yeah.
It was just a basic question. I mean, based on this idea of having a plan, would you say majority of Fortune 5,000 firms have got some semblance of a plan, or is it just really a new frontier for companies to deal with, or how would you assess the maturity of firms to even deal with it?
Yeah, it's a variety under the sun. Certainly, if you're a publicly traded company, you look at the SEC guidance, you better have a plan. That doesn't necessarily mean everyone's in that position. Often what we find is people have a plan that was sitting on the shelf somewhere that no one had looked at, couldn't really operationalize it. So now, as the result of more of these kind of very kind of high-profile breaches, which is kind of the exception, not the rule, most of these breaches go kind of with very little fanfare, is more people are spending more time to say, okay, I need to dust that off. I need to make it more operationalized. It's something that I need to test at least once a year, even if it's just informally sitting around a table with the stakeholders. But it's all over the place. There's a lot of people that still do not have a plan that are just taken by surprise. But it's becoming more prevalent in the culture.
I would tell you that from an underwriter's perspective and underwriting accounts, awareness is still not high enough. I mean, I think people are aware of it, but I think they don't know what to do with it because we kind of use shock and awe with a lot of this. We hear about Target, Home Depot, everything else. So what do I do as a 20-person shop that's doing business with some of them? And I think that becomes a challenge for many of the firms that are out there. If you're a larger firm, you tend to have, if you have legal counsel, risk management in-house, you tend to have a little bit more structure around this. I think the average firm that has some legal counsel, internal legal counsel, has somebody who really is going, I'm paying a lot of attention to this over the last several years. Used to be contingency planning for business interruption used to be the big thing that legal counsel and risk management would spend a lot of time on. I think data privacy and what we have and how to protect our own information is becoming certainly a considerable event for those departments is what I see.
Right, and that's not to say that there's not some very large, sophisticated companies that probably had plans that still managed to do a couple of foot faults out the gate.
Well, the knowledge piece is the period here. We can say this is important, but the IT department has to be involved, the sales department has to be involved, the product development department has to be involved. Everybody has to be involved for this to work. The legal team can't really help you if they don't know that information's even there. So, does it make sense? We have two questions right here.
But here's my more basic question. The same kind of headlines we've had in the last year, we had 10, 15 years ago, and we still seem to be in the same place.
Yeah, the challenge with that is as technology evolves, the people that are behind those events we showed before are a lot of them are organized crime, the POS systems. The people trying to gather intellectual property from other companies. If you do go to that the Verizon data breach incident report, it actually goes through each one of these instances and gives you some risk management help on each one of them, what you should be thinking for each one, where the targets are, how they are. They're not for everybody, as Chris was saying earlier. If you don't do credit card transactions, maybe a point of sale system is not a big deal for you, but we're still going to see these events because the criminal element of this is going to try to stay ahead of it. So I don't think this is slowing down anytime soon, if that's your question.
And maybe I have a different perspective. So really, we in the business of talking about cyber and educating our clients about it and ensuring those folks and companies like yours as well, we were humming along pretty nicely. Really, it wasn't until, frankly, last year when Target occurred did everyone's head really pop out of the sand to say and start thinking about, wow, this could really affect me. This is a major, major event. So people really were talking about it and they were asking questions, but it wasn't really until Target, until the ball really changed, right? It was kind of a sea change event where now you had almost every major board of directors asking about it because they see the impact. You had almost every risk manager saying, well, I got a CYA because I need to ask about this coverage and talk to my constituencies in my own organization about it. So yeah, those events were out there, but it wasn't really until really the last 12 months or so where these types of events and the type of insurance that we're talking about now has really, really come along. I would tell you that 75% of the companies, maybe 65, 75% of the companies that we talk with now, still don't have a plan in place. They're still talking about it, and they're still exploring it, and they're still asking questions. Which is why this industry, the insurance industry, is going to go from about $1 billion in premium now to about $5 billion, which is expected in the next 5 years.
Just to make a kind of other observation, is there going to be something that causes this to tip over, right? Because this is not new, although probably the volume and the press is
It's been around
certainly
for 15 years.
the kind of the velocity and speed of it's larger is something that we've seen. I think it's one state now, it's Washington. California introduced a measure earlier this year is the banks are taking it on the nose with respect to the fraud losses as it relates to credit cards. And so the banks are going to the state houses and going, we need some protection, we need a remedy, allow us to go after the businesses, allow us to go after the breach party, the retailers, the whomever that may be. And if that gets traction as those states go back into session in the coming year, will that be enough of a motivation? But I mean, anytime you have a CEO that, at least in theory, that's outed because of a cyber breach, anytime that you've got Congress people asking, today I guess it was the financial institutions to come in and talk to them, I mean, it certainly raises that awareness.
Do we have another?
The other we'll get the question. The other insurance that we don't have up here right now listed that is going to be more important that will drive behaviors is when the directors and officers coverage and the management liability gets involved when these larger organizations get sued because they exactly that's where you're going to start seeing a better change. It's a mixed bag, guys. It really is. The banks are already charging for a lot of these things up front with the way they charge for our services. Every time you swipe a card, you're paying percentages to each one of these banks. The merchant bank and the retail bank are being more held accountable than the card companies at this point. So there's a lot of interesting things happening and dilemmas that are all going to be solved. But until you put pressure on people, until it's painful for certain individuals, their behavior is going to be either ignorance or it doesn't affect me. So it's a challenge.
I have two questions. So the first is, you gave us a good lay of the land in terms of the people who get activated after a breach or a data incident. There was a list of the different, coach and so forth. Could you give us a little bit of an overview of the players that are involved before the breach? One can imagine a whole host of different people get involved there, consultants and tech vendors and so forth. Can you just give us a quick overview of that? The second question... Can wait. Well, let's do it.
We may forget your first question.
Yeah, we won't forget the.
I think this is probably that same list, right? Of those are the type of folks internally.
That can't be the list because you've got a lot of people who need to help the company protect itself from a data breach, and I don't see some of the usual suspects there. I mean, there are technology consulting firms that will put IT. Well, but I'm not talking about internal IT. I'm talking about... You're
talking about using resources. Who's the software vendor that helps you with your, penetration testing? Who's the one...
together your data breach prevention plan.
Right. Well, because all of these have long supply chains behind them, right? These may be the internal stakeholders, but...
Where's the ISP in all of this, for example, or the hosting company? Where's the Amazon of the world? The EC2?
Again, that's a good smile.
The Amazon of the world is saying, I'm not liable for any of this, just so you know. This goes into the other area of breach that we haven't really talked about is the most frequent one that's happening, the highest increase is happening in the medical arena with PHI and most of the recent events. In the last 3 years, I was looking at the data, the biggest increase area of breaches is in the medical arena. And now you're seeing business associate agreements for HIPAA and high tech. You're seeing other things that are being imposed on people. It goes back to our conversation that this is still trickling down and affecting more and more people. But the other vendors that you would want to look at for protecting your data would be anybody who's doing storage of your data, handling of your data, software vendors for your own systems. How are you building those systems? What kind of security protection software you have built into your system? We couldn't put the laundry list here, and it's a good question, and we really probably didn't talk about it as enough as a panel, but an ounce of prevention usually keeps you from having huge pain later on, and that's why the question up earlier was, are you really collecting something you need? Because that I find to be the biggest issue when I see customers, hey, I collected all this great stuff, I don't know what I'm going to do with it, but I got it. And that's a problem for people. They really go down that path of, I got this information.
So let me quickly tack on the second question, and then I'm done. So you said that this is a market that is going to grow from 1 to 5 billion in premium,
Mhm.
right?
Well, that's what they're projecting.
Someone is projecting that.
Yes.
That's obviously great business for the underwriters, assuming they measure risk correctly. And my question is, a lot of the breaches are not public. It's very hard to collect, what's the word, actuarial data about this stuff. How do you measure the risk? How do you know how to price it?
All right, this is me. I know I'm the underwriter here. Actually, when it comes to, and I underwrite technology companies only, so there's different industries and different components here. Cyber is for the whole world. Technology companies have a little uniqueness with regard to what cyber exposures they have. If you're a hosting company, you have a bigger exposure than if you're a custom software programmer. I think a little bit of it is assessing the value of the information they have. What is it? Is it intellectual property of a third party, which actually has more content value with licensing and things of that nature? Or is it personal identifiable or healthcare information? So we kind of assess how much of it they have, why they have it. Do they need it for a long period of time? Are they segregating it? And then you go down that path. As far as pricing it right now and truly coming up with actuarial science to it, it's a guessing game right now. It could be a severity risk. There is, like Chris said, there's a potential tipping point here where all of a sudden all these other liability coverages and all these other property coverage, the pricing on them changes because we just tipped the industry over by being silly with this. But at this point right now, I think the industry itself needs to have a reasonable amount of purchase by people instead of just the larger people buying it instead of nobody else buying it. That's where I see it.
But and could I just add before we go on? I know are we okay for time? We're good. Yeah, good. So just kind of piggyback on some of that. So when we look at cyber risk, I think your first question was, and just to add a little more color to it, nobody ever thought. Right, Target's a great example. Although there's not many Target-sized companies here, nobody ever thought of an event was going to emanate from an HVAC company. Right? We will never, and you will never be able to manage an event proactively. Why? Because you don't know what the bad folks are doing. Right? You don't know what the hackers are doing. You don't know what the hacktivists are doing. You don't know what your own rogue employees are going to do. Right? But there are certain steps that you can make proactively to mitigate the risk, and I think that's some of what you were talking about, and some of what Dave was talking about. In addition to having a crisis management plan, do you have a plan with regards to ESI? So what do you do with your data? How long do you hold your data? Are you rolling it off? What vendors do you have it? That's sort of those types of things. Looking at security assessments. Are you pen testing? Are you looking at training your employees? And we know that in some of the litigation that occurs, you don't have to be a large organization to get sued in these cases. If you can prove to the courts that you've done all your due diligence, that you've actually trained your employees, that you've got a plan in place, that you're just not haphazardly dumping files when you know that an event has occurred, all of these can actually go in your benefit. So being prepared and taking on very, very proactive measures, while you're not going to beat what's going on, right? You're never going to know what malware is coming out next. It's impossible to know that. But if you can take proactive measures, you will find yourself very, very much ahead of the game.
Know what the law is in your state or what state you're operating in. I mean, those are easy things to do. The other party that I would say is proper legal counsel that knows, some privacy exposure for your organization, can evaluate it for you, tell you where would you be concerned if you were thinking about that. And that's where it's, a couple $1,000s for the right attorney in that situation could be worth a whole lot of you're doing business instead of dealing with a large event.
I was going to say, one thing to your point, I think that's right about vendors around anyone who has access to your systems. I'm a city, and I mean, obviously you deal with things post-breach, but the reality is, if you're a large financial institution or even a small one, if you're a healthcare company, you have a lot of regulatory obligations up front. And so, to the extent that you have put in place a good vendor management policy, to the extent you have put in place a good set of firewalls and information security controls, you're going to be in a better place even if those are ultimately overcome by some very sophisticated attacker. So you don't want to, I think it's a very good question. It's not just, it's preventive and prophylactic, but it's also even if all your best defenses fail, the fact that you can show and limit your liability potentially in the event there is a breach. So I think it's, I do disagree a little bit. I mean, I think you're never going to stop everything, but I do think that
Yeah.
it's incumbent upon firms, especially in more regulated industries, to take it to the mat these days. I mean, there's a tremendous amount of regulatory guidance to that effect in financial services. I think healthcare, is there. That you really do need to go, and anyone who has access to your system. I mean, it wasn't always that way.
Right.
But I mean, I spend a tremendous amount of time, like everything from individual independent contractors to very large service providers of critical services, thinking about everything from vulnerability assessments to who has access, multi-factor authentication to
Right.
blocking all sorts of third-party site. I mean, so it's a lot of work, but when you look at as someone mentioned, state actor, infiltrations that are happening apart from individuals sitting in their garages, I think you have to, especially if you're in a regulated industry. You can't.
You don't have a choice. You're
Right,
absolutely right.
It's a regulatory obligation, and insurance is great, but if you just rely on sort of limiting your liability exposure through a financial means, I think there's going to be a world of hurt reputation.
It doesn't limit your liability.
No, it doesn't.
Yeah. The misnomer.
How much you're going to be indemnified,
Yeah.
that's about it.
Right.
Yeah.
So I mean, it's good to have that kind of coverage, but I mean, I think you really do have to be proactive about the steps you're taking to avoid or mitigate this.
You're talking about having a multi-leg process,
Yeah,
right?
exactly.
I mean, a risk management process, a decision on what you want to collect, how you're going to protect it internally, what vendors are going to be involved, who's not going to be involved, and the risk transfer mechanism is one other means to help you protect. So it's a multi-leg process, and if you only use one leg, there's not too many chairs that stand up very well on one leg. And this is almost any of your exposures as a company. It's not just a privacy thing. If you're not thinking about it in that manner, you're going to probably be caught one day. You may not, but you'll be caught with, I'm falling over and I've got to figure out how to get back up.
Right. If you're a smaller company and you take those kind of breaches, I mean, even if you have indemnification, if you have insurance, I'm not trying to knock it.
Yeah.
You'll lose the trust of your customers. You lose the trust of your counterparties.
You're not going to have insurance if you keep having
Very hard to value.
Yes.
Good luck getting
But you're
it.
right. The value,
The franchise value you lose, it will often be greater.
your reputational value is important too. But insurance can help protect you and get you on your feet when you do make a mistake with your customer, and now you've got protection to help them get back on their feet. That can actually flip you the other direction too.
Right.
So
you can be responsive and deal with this.
if I'm dealing with a vendor and I'm a company and that company has the proper risk management in place and the proper tools and services in place, and then they have the insurance in place as well, I feel a lot more comfortable doing business with them than one that says, hey, I got everything covered, don't worry about it.
Oh, no, I
you
agree.
know.
Agree.
Okay, so we got a question in front, then we're going to move on to the fun stuff, the insurance.
And that,
Go
actually, the question was somewhat covered. You're talking about best practices at
Yeah.
a certain level for smaller organizations that will mitigate your liability risk.
Absolutely.
You can never protect yourself from breach for 110%. So
That's right.
that was all I was and I think the gentleman, you all discussed it. So
Sure.
I'm just wondering if you have best practices in place, then at key parts of your organization with a plan and a discussion, that's an important part of the
Absolutely.
right.
Absolutely, yep.
So, and thank you very much. Thank you.
We got it.
One
more in the back.
We're going to move on and we can get to that. So I think what we said a little bit earlier, sometimes you see smaller companies, maybe they're getting bad advice or they just don't know. They think they may already have liability coverage. Don't want to bore you with, these are some of the traditional types of insurance, but we have a slide coming up and it's a little bit overwhelming if you're not an expert. Commercial general liability is your basic slip and fall or products liability. Anybody who's in business is going to have it. Your property, business interruption, it's kind of like your homeowner's insurance for your business. Crime insurance is for theft by your employees. Kidnap and ransom is what it sounds like. It also can have extortion in it. And then there's professional liability, which is a breach of your duty, your error or an error or omission while committed while performing your services. And then a lot of small companies will actually have not individual policies, but what's called a package policy or an all-in-one, and they may have nano elements of cyber liability in it, but they're not going to have broad insurance. So that's your insurance lesson for today. Now we go on to, this is a little bit tricky to read. I think maybe what's most helpful is if you look at the blue, that's no coverage. Right? So you look at property, general liability, crime, kidnap, ransom, E&O, cyber.
Yeah, so basically what we're talking about here is you could look at all the different coverages that an organization should have in place. You're going to have general liability, you're going to have property insurance, but within reason and within realm of you don't have a BOP policy and you don't have a small commercial practice policy. Again, traditional insurance is not going to cover you for what a cyber or even a technology E&O policy is going to really provide protection for. And we're talking about the third-party events, that is, I've harmed someone because of my wrongful act, or none of these policies actually, well, within reason, but none of them respond to the first-party coverages or losses that you're going to experience because of a data privacy event, right? Most of these policies are responding to physical events, to physical perils, to different types of triggers than what a policy, a privacy technology, policy does respond to. I think that's. I don't
That's
want to go
plenty.
Into, yeah, I don't want to get into too much detail.
Does anybody have any questions on that slide?
Basically, they're not covered, what you're saying.
I thought the slide was pretty easy to read. I don't know.
Joe's point is that when it comes to data breach and the expenses for first party and the liability piece, it's very important that you communicate with your agent, review what you have. There are some incidental pieces that fall into these other places at times, but it's very important. That's the communication piece you want to really work with. If you're involved with the insurance purchasing decision for your company, you want to ask some questions about it and make sure you're getting the right advice.
So what might they have? For next slide. What can they buy? What kind of protection is available?
Well, there's a lot of different flavors for this, and depending on what type of business you are, if you're a technology company like I underwrite, you can build things into one program with a product that can address the network security liability. So if your products or service or your own network has a breach and somebody sues you from a liability perspective, they get your private information, they sue you for defamation or some other privacy type personal injury type allegation. Media and content's an interesting one for a technology. How many of you guys are technology companies in the room? I know we got a mix. If you're a technology company, one of the areas that is media coverage is that gets into what most people refer to as intellectual property with media activities like advertising injury type exposures. For a technology company, there's another exposure here that I would point out to you, and that's software exposure and copyright infringement for your software. It's probably the most interesting one for a technology company. It's almost like the earthquake coverage for technology companies because that's the severity loss. That's the one that's going to go into a 7-figure claim for you if you ever get involved with an intellectual property suit. So if you're a systems integrator and you're using somebody else's technology improperly and they sue you for using it improperly, that's an important component for you. Regulatory liability tends to fall into a couple of different categories. It can fall into a first party situation because a regulatory body's not suing you for damages. They're claiming you broke the regulation and therefore they're fining you, and in many policies you'll see that as part of a first party exposure. And Joe, I don't know if you have any other comments on that. I know there's some other policies out there for general companies on regulatory too.
Well, there is, but I just want to make sure, I want to point out one thing. How many people operate in other states than just in New York?
Yeah.
Right, okay. So the fact that you're located here, and if you have an event, doesn't really matter that you're located here, right? It matters where your clients are and where your customers are, because those are the laws that you're going to need to follow in those particular states.
Yep.
So the fact that you're housed here and you've got a great office and all those wonderful things, that's great. When the event does occur, keep in mind that you're going to have to be following that particular state's laws. You're going to need to know what they say, how you need to respond, what you need to do, etc. Which means that's generally not going to be your in-house attorney. That's going to be an expert that you bring in to help you navigate what's going to happen and what's going to occur next. Because in some of the states you're operating in, not only might you have to notify the individuals, but you might have to first course of action notify the state attorney general, which becomes very problematic.
Yeah, in some states, depending on if you even just do business with one customer. California is one of those states. If you have one customer that's in California, you got to comply with their law. So it becomes a little bit more complicated for you.
Yeah.
Sir, can you please define what the customer means? For instance, if you're a public company and we have stakeholders and we have shareholders,
So
any of them customers or customers?
you can have shareholders that are customers, absolutely, right? So if you're an organization where you are a healthcare organization, maybe you're a higher ed institution, maybe you're a retail organization, Your customer is is the individual that you're collecting information from, right? So let's back to that slide of PII and PHI. What do you collect from them? PII is personally identifiable information. PHI is protected health information. You can actually even be liable for corporate confidential information. So when we're talking about customers and who you're liable to, it's customers that you have information on. If you're in the healthcare business, it's patients. If you're in a higher ed business sector segment, you're talking about student information, parent information, can be other third-party information. So it really depends on what industry sector you're in and who your customer or who your client is.
Right, and the rest of the world, that we'd call them data subjects, whose
Exactly.
information it is, right?
Yeah.
Whether it's your employees, your traditional customers, your officers, whoever's information is compromised.
It may not even be your direct customer. It might be your customer's customer. So I do business with another business that collects thousands of records. That's not my direct customer out there that I've got those 1,000 records, but they're on my server and I'm subject to the law. So customer is a very broad term, and data subject is probably one you want to think of. Whose data do I have? What personal information do I have?
And it's even more, it's in some respects it's worse, because in the 47 states plus DC plus a couple of territories that have these laws,
Yep.
It's very much focused on, oh, you've lost the information on the data holder. But all of those laws, almost to a single one, will say if you hold the data on behalf of someone else, right? So it's not necessarily you're holding consumer data on behalf of your client. That you have an obligation to immediately
Fair custody
notify
control. Yeah.
those clients, right? Immediately,
Yeah.
right? Which is nothing like the 15, 30, 45
Right.
days that you potentially have under the state laws.
Keep in mind, I don't know how big your organizations are, but keep in mind, data is really what we're talking about. PII, PHI, it's data. It's not only your customers and your clients, it's all of the information that you have on your employees as well. It's all subject to the law.
I know one of the questions that a lot of folks have, is the insurance really expensive? Is it hard to get? And does anybody even pay claims? I think there's a lot of attorneys in the room who think that insurance never pays anything. So
I'll take
we'd love to hear that.
I'll take the availability and the other piece, and I'll let Dave talk about paying claims. So the insurance is actually, so the product's been around a while. It is very available. It is application driven. It is depending on what you are doing as an organization and what industry sector you're in and how much information you have and what you look like when you peel back the onion as far as the underwriting goes. I would say that for organizations right now, if you're a small entity, you might think that maybe a policy that's $2,500 might be expensive. You might find that a policy that's $2,500 for $1 million liability is, wow, I didn't think it was going to be that cheap. So it really depends. Most of the organizations that we're dealing with, we help them understand what their risk and exposure is. We help benchmark that for them. We help them look at what their peers are doing. And again, there's not a lot of information. But is it expensive? I don't think it's expensive at all. Because when you look at the cost of operating your business, and you're looking at maybe in an area that maybe you own a building. You have sprinklers in your building. You have auto liability insurance. You have general liability insurance. This has now become an insurance that you should not think is an option anymore. This is an insurance that I'm a business owner. I have data on employees. I have data on customers, etc. I'm a technology E&O company. I have wrongful acts potentially. I have errors and omissions. This is an insurance that you should consider and that you should be putting into your business plan as far as line item budget, insurance. This is one that you should really be thinking of.
The cheapest product that I sell is $700 for $1 million limit of liability. So it can be fairly affordable depending on the size of your operation. Most of this coverage gets rated on your sales for the liability, and for the data privacy piece, it's usually on the number of records you handle and hold, how you manage that. It's really hard. Depending on the industry you're in, it would be different. For technology companies, the predominant exposure that I still see from my claims that come in, 90% of my claims are tech E&O, the one that was on the bottom. You screwed up and it caused somebody else financial harm. may have cost them a security breach. It may have cost them just financial harm and losing customers. So, there's a large gamut out there of pricing depending on who you are. But small companies should not be afraid to ask for this stuff. It's not hard to get. It's plentiful in the marketplace. There are plenty of carriers, not that I want to advertise for other people, that want to sell this coverage to you too, so it's a very competitive environment. There's plenty of people like Joe that beat us down when we don't behave properly anyway. But the predominant claim area that we're seeing on tech companies is more on the liability side and their actual screwing up of a technology. So they made a mistake in handling the technology. It's probably 92% of the claims, and about 5 or 6% of the claims involve IP, that software piece, and then that other little sliver in there has maybe something to do with a security event and stuff of that nature.
Can we just, I think it's important for Chris maybe just to talk about some of the events, maybe some of the litigation that's going on. While it may not be tapping into a policy, there's certainly a lot of different things going on in the space right now.
Yeah. Well, and we've touched on some of them already, right? So claims directly on behalf of the data subject, right? They're bringing those claims, whether they're your customers or employees. The post office, which has been in the news this week, already had their organized labor bring a claim. Most of those don't survive very long, right? They can be very expensive to prosecute or defend anyway, but most of those are still getting batted down. We're seeing the retailers, the banks, the credit unions have been especially aggressive for the large breaches, especially those that involve some kind of payment information. We've started to see waves of shareholders bringing derivative suits against management for failure to protect the company information. So there's been a number. It's very active. It can be very expensive to defend, but we haven't seen a lot of those actually materialize into actual judgments.
Just a question regarding the assessment of that insurance. Let's say we're looking at a policy. How does the insurance company assess? Is it quantitative? Is it based on the amount of data you have, or whether or not you interact with your due diligence, your pen testing, your security, your encryption? Are those all factors that are taken into effect when you are assessing how much?
They're all factors. We're going to look at, I've got all this PHI, but I don't know anything about the HIPAA regulations. Okay, well, maybe that's not a good risk, right?
Yeah.
So I mean, it's just like, hey,
for the right price.
Hey, for the right price, No, I mean, if you're standing on top of the Empire State Building with a golf club in your hand, expecting during a lightning storm, and you want me to protect you for lightning coverage, I probably won't do that. So it's I think there's a balancing act here. That goes back to, we want to see the due diligence that you have have awareness of what the issues are. You have a education program with your company. If you're a small company, that means everybody in your company is aware of, hey, we're collecting some pretty sensitive information. How do we protect it? Where do we store it? Oh, let's just take it on Dave's laptop and go hang it out somewhere and don't encrypt it. And so there's all these balancing acts that we're going through when we underwrite your account. We're going to look at those things. But one area we will look at real closely is your contracts. How are you managing your contractual liability? Because that's what we're going to defend you with. And if you're bad at contracts, it's really hard to defend you. So, I mean, this is where, again, the ounce of prevention up front. A company's coming to you. You're a small organization. You're going to a large organization. They're going to force you to sign some things you may not want to sign. If you have to sign a contract that's a little bit questionable, how do you manage the risk management leg of that to make it better so you don't have you fall into a pitfall? But large companies will negotiate with a small company, believe it or not. When they want to do business with you, they'll have a discussion with you.
Actually, was going to be my next question is, now how do you reassess that? Quarterly, annually? Because your risk can change based on.
We look at companies typically annually. There are some companies that in the tech sector. One of the quandaries is everybody says, "Oh, technology changes so frequently." The reality of it is, yeah, technology changes, but if you're a systems integrator, you're going to be a systems integrator tomorrow. You don't all of a sudden become a hardware company tomorrow. You're the same risk. We have to watch what the technologies are. We have to watch what the litigation is. We have to understand and how to help you with risk management. And that's what we spend a lot of time doing. We really spend a lot of time reviewing contracts, reviewing your operations. And this is where I would encourage you to help your agent give them the information they're asking for. There's a reason behind it. It may not feel that way. It may feel, oh, what, they're just asking me what I want, We're not trying to collect information that's useless. We really want to understand your risk and get closer to you so that we understand how to help you and defend you when it comes. That's the important part.
I had a question about, you kind of touched on it, but indirectly, whether it's an insurable risk or not, the loss of trade secrets and lost profits associated with that. Because we're seeing more and more people interested, some of the most sophisticated attackers, again, maybe some of which are state sponsored, are going after, especially, technology companies, big companies, taking their trade secrets, using them for competitive purposes. Is that an insurable risk at all?
Trade secrets and patent are usually excluded on
That's
liability
what I was gonna
policies.
say, yeah.
They're usually excluded, but what you're talking about is also a first-party exposure. I'm a company that
Right,
somebody
exactly.
stole. There are very few products out there that are very expensive and they're hard to get. And Joe might know of some too, but there's a handful of organizations. Most of them are offshore type companies. The Lloyd's of London market might give you some kind of patent or trade coverage. There is a company out of Kentucky that does sell first-party coverage for those kind of events. You go through, there's a diligence there that is beyond insurance, to be honest with you. It's very tough. They have a full legal team that goes through your patents or your intellectual property information, and it's a complex
And
process.
I think it's less. It's often less about there's one thing if you're infringing third-party rights, but I think the big issue I've seen with a bunch of tech companies is, essentially you have a trade secret. It's very vital to your business.
Yep.
Someone penetrates your systems and takes it, usually to a foreign jurisdiction. They utilize that trade secret to sell goods or services that are competitive with yours, and suddenly you're losing profits left and right.
Well, so there's two ways to answer that question. It's a great question, but there's two ways to look at that. So you're talking about the first party loss
Correct.
of your own IP, right?
Yeah, exactly.
Right. So you have that exposure, but you also potentially have the third party loss of I'm working with a partner and we're developing a technology, and I've got an NDA in place between my organization and XYZ organization. Right. So you have that where I failed to protect that information.
Right.
It was disclosed. What's the value of that? That can be discussed in litigation forever. But that first party loss of somebody hacked into my system and stole my information, and I'm not infringing on anyone's IP, and I've not done anything wrong with it, that's a very tough risk to insure. In fact, I know of only one organization that's in fact even looking at insuring that risk. And they're looking at, there's not, it's really not something, that you should be protecting your own IP. The fact that somebody hacked into your system and stole your IP, that's your first party loss. That's not necessarily something that we're talking about that's insurable under this type of an insurance program.
Yeah.
Okay, let's get to the question behind you.
Is there another question back there?
Good
Maybe not.
question.
There is an interesting follow-up to that, though. A lot of technology companies are actually falsifying intellectual property for people to steal, so when they go build the product.
Oh, really?
Well,
Yeah.
also offensive hacking.
In other words, you design it a little differently. The machine doesn't look quite the same, and somebody starts producing it and selling it. So it's kind of interesting. There's some counter espionage kind of stuff going on there. It's not as well known, but there's some interesting things there. Was there another question back there?
I have- sorry.
So throughout the conversation tonight, we've heard cyber, espionage, state-sponsored, this and that. Does this get to a point where this transcends just a sort of a market-driven issue and becomes more of a national security issue? And if so,
I think it already has.
Well, it seems to be that we believe this, but there's no national policy to deal with this the way we would deal with other external threats to the company or to the country that we would view from like
Right.
I'm gonna leave this one for you, Chris.
Yeah, thank you for saving me. I don't know. I mean, we
I'm an
saw this
insurance
last
guy.
week when the president was in China, right? It was supposedly on the agenda, but
They never talked about it.
well, if they did, it wasn't. It certainly was not the priority. I don't know. It'll be interesting to see if the cyber framework that's been put out by NIST and the new focus, certainly it's a budget priority amongst the federal agencies, whether that raises the profile, but it's kind of to the earlier question, it still hasn't tipped over yet. It's not, it hasn't yet gotten to the point where it outweighs trade.
Well, there's
other
investment
priorities.
in this. I mean, the government is certainly investing in this. NIST is a good example of the effort they're putting on trying to get some standardization to it. But there's a lot of investment in technology and things to try to mitigate this. But there's always somebody else that's going to be ahead of us.
Well, yeah,
That's the
and
issue.
I don't think I've been involved in a lot of discussions, as these gentlemen have as well. I don't think there'll ever be a overreaching U.S. cyber policy, right? We have DHS, you've got the SEC, and you got now the FTC doing its thing. So all of these multifaceted, right, government agencies, unfortunately, even state agencies are looking at this as, frankly now, a way that they generate revenue. Why? Because there's fines and penalties associated with a lot of these events. when we talk about DHS, they're really the organization that's kind of leading the charge when we talk about critical infrastructure. Critical infrastructure, there's 16 different segments. What does it really mean? Not every organization is involved in critical infrastructure, right? We're not a utility, we're not an XYZ company, but the NIST guidelines, in fact, are being adopted by most, if not all, at this point, of the underwriting community. They're all looking at some type of creation of taking those NIST standards, even though most of their organizations, most of their insureds are not in critical infrastructure. They're they're so baseline best practice, and they're things that you should be thinking of, that they're incorporating a lot of that into what's going on to their underwriting practices now. We've spoken to a lot of insurance companies over the last couple of weeks, where it's certainly in the retail sector. The retail sector is one of the hardest hit areas right now, and that market is hardening tremendously. And most of the organizations are now asking many, many direct questions related to what those NIST guidelines are asking, because they have a direct correlation on the risk that we're looking at with regards to point of sale systems, with regards to what retail companies are doing. Even though they're not critical infrastructure, the guidelines make a lot of sense.
I guess I was getting at something along the lines of, you see a group like Mandiant go out and say, here's the actual Chinese platoon over here that is attacking the following American companies.
Yeah.
And they may be successful in doing so. They may exfiltrate a variety of things which could lead to all sorts of exposures. If I was in that company and it was a bona fide state-sponsored event that hit me, wouldn't I feel like I would try and get recourse back from the government somehow to help me and protect me, because I am a U.S.-based company being attacked?
So you're talking about cyber terrorism and its kind of in its base component. So cyber terrorism, under most policies, is a covered event, right? So when we look at state-sponsored events, when you look at homegrown activities, when you look at a rogue employee, is that cyber terrorism? Some would say, well, it potentially is. But most of the entities that we're working with now on the insurance side have provisions within their policy that do in fact cover an event, right? It's not necessarily you can't necessarily say it's a physical terrorism attack, but what is it? It's a cyber terrorism event, and almost every policy that we respond to, and I will tell you that every policy that we work with covers cyber terrorism events.
And more generally, though, it's can you even look to the government to protect you, right?
Yeah, it's not.
The White House, the State Department, the Postal Service, are they in a position to protect you?
There's no, you will not see TRIA related to cyber events. I
You
don't
won't.
see that coming out.
You won't. And you also have to understand some of this is not government related. It's the commercial arena
Right.
where payment card industry is what's really driving the security protocols in that area. So, it's a mixed bag. It's hard to deal with. You got a question back there? We had two of them. Go ahead. Either one of you.
Well, so the topic today is called Cyber Armageddon. Would any of the speakers subjectively at least like to try to define that scenario? What is Cyber Armageddon?
Yeah, so I thought of the title, so
We're going to blame Joe on that one. I didn't want to scare you that much, but Joe did. No, I'm just kidding.
So really, so what I'm thinking of, and what I thought about the title, and Andrea and I talked about, someone put some of the blame over here, but really, it's that event where you now have to look at it kind of more critically than you ever have, right? So it's Armageddon. It is, what have I done? How do I fix it? How do I move forward beyond just maybe the financial loss? But what about my customers, and what about my clients, and what do I need to know, and how do I protect myself? I mean, when you think about this scenario as it unfolds, it can be, you are in a battle, right? Like I said earlier, when you have an event and you are dealing with maybe 47 different states, if you're involved in all the different states, or even if you're involved in 10, and you don't have a staff of attorneys to look at the different laws, you are in panic mode. And what do? You have to reach out to people, you have to reach out to experts. It's kind of warfare. It's cyber Armageddon, and you got to know how to respond, and you need to know what to do next.
So Joe, are there any companies you can think of? I mean, Target, Home Depot, they're still in business, they're big enough, their responses maybe haven't been exemplary, but they've been okay. Are there any companies that have gone out of business? Because if you go out of business for a cyber event, that's your cyber Armageddon, right?
Oh, what was the, I forgot the company that went out of business. It's not coming to me now. So there have been a couple companies that actually have gone out of business, and they have gone out of business because they were improperly prepared for the event. They didn't know what to do. They didn't manage it correctly. They spent money that they should not have spent, and they were liable for things that they didn't think that they were going to be liable for. I'll research it, and if anybody wants to know that specific information, I don't remember off the top of my head, but
I'll add to that
Yeah.
though. One of the things that we've seen in the tech E&O world with claims, and we've got enough history there to see it, is that when someone isn't properly protected, if you're a $5 million tech company, and there's a lot of $5 million tech companies out there, and you might be one of them, your profit margin might be 10%. There's $500,000. Can you afford a $1 million loss to your operation, or a 200, whatever, a $2 million loss to your organization?
Yeah.
And the reputational piece of it, by the time you recover from this, it goes back to the disaster recovery scenario, is if you're not prepared, you're not ready, you don't have the right defense, you can't recover quick enough. And when you don't recover quick enough, you lose customers, you lose reputation, and the next thing you know, the for sale sign's outside your business.
Yeah,
That's really what we're talking
And
about.
I think there's something to really be said, and I'm not trying to sell anything, we're trying to educate you here, but there is something to be said for the value that the policies actually provide. Because you're in the business of operating your business. You're not in the business of responding to a cyber event, right? So you want to keep your eye on your operation. You want to keep your eye on moving the revenue ball forward. You want to keep your business going. You want to keep your business thriving. The value of these policies is that they take the mitigating and the managing of the event basically out of your hands, because they provide you with vendors like Mandiant, they provide you with vendors like Verizon, they provide you with attorneys like Davis, Wright, Tremaine here, crisis management firms, where you don't have to do any of that thinking. These firms are established, there's vendor panels, all you do, literally, is pick up the phone, talk to your broker or talk to your insurance carrier, and you start the ball rolling. From that point on, yes, you're involved in many internal calls and discussions, but you don't have to go out when the building is on fire to negotiate a contract with one of these experts and one of these professionals. And that's the real value of it, right? It takes that whole Armageddon piece and actually really nicely puts it in a package for you to mitigate the event. Yes?
You just talked about expenses, whether they're inside or outside of limits, and how that might affect strategy.
That really depends. Some carriers...
Did everybody hear the question?
Okay.
Yeah, let's
So
repeat
the
it.
question is really, sometimes legal expenses and other types of costs can reduce the total limits that you might have for insurance. Sometimes you have the limits, and then you have separate limits or limitless expenses. So the question is, how does it work within these cyber policies?
It really depends on the, and I say this with or all due respect to everybody that's up here, because it really depends on the carrier that you're insured with. Some of the carriers will look at some of the expenses and say, well, yes, those are expenses that we are willing as an insurance carrier to put outside of the limit. Now, not everything is limitless, right?
Big difference.
There is a big difference.
Small company.
That's right. So if
Big legal expenses.
That's
if
right.
you're included in your limits, that's going to affect.
Right. So it really depends on the carrier, what that particular expense is, et cetera. But there are companies that do provide certain specific expenses that are outside of the limit, and then there are generally other expenses that are inside the limit. So it really depends.
That's why it's important to work with somebody who knows the differences among.
Yeah, these policies are complex.
It's not like IGL.
No, the policies are complex at best, and you really
They're
need
not
to know.
standardized at this
No,
point.
and I don't see them getting standardized.
Yeah, and I don't think they will. Professional
No.
liability has always been one of those categories where defense is typically in the limit,
Right.
and most of these policies are going down that same kind of path. And I would tell you that be careful of, you want this endless thing, but you also want an affordable policy too.
Right.
So there's a balance between, and this is where choosing the right limit for your operation becomes the critical piece. Do you need a $5 million limit, or do you need a $2 million limit? Most of these...
And what does that mean?
Yeah,
because-
exactly. Balancing your risk tolerance and what you want to transfer is what you're talking about. And I think, sometimes we all just say, hey, just give me everything. And, if you don't use this over here, you might want to spend your money
You
over
may
here.
not need everything. Right?
Exactly.
Just a quick question regarding breach detection. So we're talking about a data breach, but how do you detect and quantify what it is that was either stolen, looked at, changed? Even sometimes the breach is not about stealing data; it's about adjusting a percentage in a program that would then affect outcome.
Do you get involved in forensics?
Only the periphery, as much as they allow
Yeah.
lawyers to talk to engineers.
So
We're just talking about it from an internal, for a company to detect a breach so that they can then notify.
Yeah.
Yeah.
It's very difficult. I mean, it's much more art than science at this point, and a lot of it depends on the confines of what happened. Right? When you lose a laptop, when you lose a backup tape, it's usually much more discreet. If you can identify what data was on the device that was lost, when you have a compromise where data isn't necessarily exfiltrated from the organization, it becomes much more difficult. It becomes much more difficult for the lawyers and the organizations and the forensics firms to say, what was accessed? What are my obligations? It's
Right.
There's not one answer. It's not one clear answer.
But so there are some breaches that manifest themselves very quickly. You have a rogue employee who's trying to extort you. Well, you know what that event is. Somebody lost a laptop. Well, you know what that event is, right? If you've discarded papers improperly and they found their way to a park locally, which has happened many, many times, or you're selling used office equipment and it's chock full of PHI, those things happen, right? You know what those events are. The ones that are really tough to really determine is, well, somebody's been rooting around in my system for 8 months, for 10 months. And it's not until a customer or a client or maybe an employee says, well, what's this? Or I have this charge on my card. Right. So you may never know until somebody brings it to your attention. And in fact, many of the large events that you see now, they don't manifest themselves until somebody raises their hand and says, hey, there's something going on here. So it's very difficult, even if you have all the best practices, even if you have intrusion detection, and if you have, encryption only goes so far. If you're not encrypting end to end, well, you've got holes and you've got gaps. So you have to look at all the different things. It's very difficult, and that's where, when we talk about some of the coverages and some of the carriers, in fact, all the carriers, that's where making sure not only your IT team, but you're bringing the right forensics team. Because they're going to help you determine what the nexus of that event was. Well, was it malware and it's been rooting around in my system for a day, a year, 18 months? You won't know those things until somebody starts really poking around to find out what's actually going on.
Well, you think of it from an IT perspective. I mean, if there is a malware found or a virus found on a computer, generally the service desk handles it, they clean the malware, they move on. They don't go into what does this mean, how did it affect the entire company. So just trying to gauge, from being fair to others, if you wanted to identify something and also being fair to your company, when do you raise your hand and say, I believe something is up?
So that's a good question. So basically, what we try to tell our clients is if you think something has occurred, right, for purposes of it triggering maybe an insurance policy, if you think something has occurred, regardless of the fact that no client has come to you, you've got no demand letter, nothing has happened, no contractual issue, but you think something has happened because we actually found something, or an employee or a client or somebody has come to us. So that's when, number one, you should actually, again, what the policies provide you is with a breach coach, right? You pick up the phone and you call your external breach coach, who is a firm like Davis, right? And you say, hey, we've got this issue going on. Can you help us determine, can you help us talk about, help us maybe bring in a forensic company, help us determine what's going on? Because ultimately, you might find out that, okay, you've had malware rooting around in your system for eight months, but what did they really get? Was some of the information encrypted? Was it not disclosed? Do I really have to notify 50,000 people, or do I only need to notify 1,000 people? Right. So it's really that process of going through. Well, how do I look at this, and who are the folks that I bring in to help me really understand what the extent of the event was?
More of a validation of what it is that
Exactly. Yeah. And you're not always going to be able to validate that immediately. You know, and sometimes depending on how big the event is, if the federal authorities get involved, like the FBI, they may take your server, or they may take your equipment, and that happens on some of the larger breaches. So, it really depends on what the event itself is.
They may be the ones telling you that you've had a breach.
Right. Knocking on your door.
Question in the back, maybe?
Related to the lurking malware issue, how does that play out with coverage and underwriting? This actually came out in a meeting I was in the other day. Let's say the company who's looking for insurance discloses everything to the underwriters. The underwriters do all their due diligence, but they don't have a full forensic team go in. Policy is written, and 2 months later, the breach happens for something that has been lurking prior to the effective date of the policy.
Yeah.
But nobody found it, including you guys.
Correct. And an insurance company's not going to come out and do that forensics. We wouldn't be able to afford you a policy if we went out and did that to everybody.
It would be covered
It typically would. I mean, there's all kinds of, every claim has a fact, circumstance associated with it. You know, if you're talking about technology errors and omissions, if the glitch or the wrongful act happened well before you started writing policies, that's one of the nexuses of the claim associated with when you buy a claims-made coverage. So there are some items that you'd have to go through. It's one of those things that if it's reasonable that you did not know it was there and then it finds it there, that's going to be covered. You know, I mean, we can't go through every situation. We'd have to look at it.
Can I write that down?
But I mean, get your phones out.
I'll be honest with you. I'll be honest with you. I do work closely with my claims specialist who handles all of our claims. It's very important you have a carrier that understands their policy, who is involved with the wording in their policy and is involved with helping claims understand what's going on, and has a specialist that knows how to handle those claims. You know, for the most part, you tend to get it always leans towards the insured. I know everybody may not feel that way, but here's the other thing. There's always something that's not covered that's associated with some of these things. Just because a glitch or a data breach happened doesn't mean the policy was unlimited in providing you to drive to your sister's house to go say hello. You know, and people sometimes miss that conception of insurance is for everything, right? Well, it's not. It covers particular things. And the question you want to ask is, what were the damages? What were the expenses? Are those the things that I purchased coverage for? The things that I didn't purchase coverage for, to hire 5 more people to do X or Y or Z because I needed to, because I felt like I wanted to serve my customers better, that may not be part of your coverage. So I think you have to understand what you're purchasing, and that's hard. I know it's hard. It's not fair because there's so many other things we want you to be able to do. And that's where Joe and Andrea and I and Chris work really hard to help you guys try to understand your coverage so you can go out and do business and prosper as a business and lean on us to give you at least the advice. But there's always in a claim inevitably going to be some. A good example is there's not a policy out there that's going to cover an intentional act, right? Okay? So when you bought insurance, you didn't buy intentional act insurance. So, you know, if you went out and you did something on purpose, you go hit your neighbor and you knock on, you know, whatever. I'm giving you a bad example. But the point is you need to understand that insurance has certain aspects that's your transfer, and some things it's not going to address.
Well, and I'll just say one thing, one point to that, just to build off what Dave was saying, is that there's only one aspect of an intentional act, and that is a rogue employee, right? So if you've got a rogue employee, in your mix, where they are intentionally trying to do something to harm you or to harm a client, that's an intentional act that actually is covered under
that would be covered under the policy, and we wouldn't cover the rogue employee.
Right.
We're going to cover the company unless now here's a good example of where you can get in trouble. How many of you guys are owners of your own company in here? Nobody? All right, so you're owner of your own company. If you do the intentional act, we're not covering anybody because you're the owner, right? Because you're an executive officer of the company. So there's some interesting components to that. But yeah, rogue employee is a good example of how insurance has evolved to protect the innocent, so to speak.
Okay, well, hopefully you guys learned something. Thank you for all the questions. They've been great, and I guess we'll be around for a few minutes more if people have questions.
Thank you, Andrea.
Thank you.